Okay, so you've done an awful lot in a very short period of time, not just in the space, but in your life. You're now 20,
Six, I think.
26. Okay, great. So I first met you, I think when you were about 22, maybe?
21.
21, yeah. And so you started, you've started several pretty amazing things. You were part of the first security token. You were part of the first utility ERC20 token. So why don't we go back to the beginning? I've heard you tell variations of the story, but I'd just like to hear how you would tell it today about what really drove this interest in blockchain sitting as a college student.
So it actually stems from a much earlier point in my life. I think I was like 12 years old and I realized I want to change the world at scale. I want to have a massive positive social impact on the world. And growing up in a small farm town in western Massachusetts, I thought the way that you do that is you go into politics. So I developed my own major in college. It was in political strategy, a very interesting interdisciplinary study that I still apply to this day. But I went and worked for the governor of Massachusetts, ran the campaign of the woman who's now Attorney General, and became deeply disillusioned. Between the bureaucracy and just the role of money in politics, I realized I was just going to spend my 20s raising money for politicians and pushing paper. Didn't want to do that. Earlier, I had been at Occupy Wall Street in Zuccotti Park and had seen just activism be a total exercise in futility. We accomplished nothing, and I was just very disillusioned by the ways I thought you make a difference in the world. And so I started to look for something else. This was at the end of 2013, early 2014. I transferred to the University of Michigan, and I happened to move in with a young Bitcoin enthusiast. And he was from the inner city of Detroit. He had his house foreclosed upon, his family, during the Great Recession. He was like an anarchist, libertarian, didn't believe in government, and I was like, you're crazy. And I really didn't have the same philosophical underpinnings. My parents are about as leftist as you get, borderline Marxist. And I sympathize with kind of progressive liberal values. And so I looked at this Bitcoin industry. I was like, these are a bunch of fucking dingbats. Like these are just a bunch of crazies. But then the more I began to explore Bitcoin, joining the University of Michigan Bitcoin Club, I began to get excited about the technology. And at the very first Bitcoin Club meetup I went to, I learned there were other Bitcoin clubs at MIT and Stanford. Got on a call with the heads of all the Bitcoin clubs, said, let's create an organization. And what is now the Blockchain Education Network was born. And that grassroots undertaking that I thought would, spread to a few schools, within 3 months was at over 100 schools, 20 plus countries on every habitable continent. So I started speaking at conferences where we started meeting, and I just caught the Bitcoin bug. I really felt that this was a revolution. This was a whole paradigm shift in what value is and what it can be, and I never looked back. Dropped out of school shortly after.
Did you drop out at 19 like every other great entrepreneur?
No, so Joey, my co-founder of Augur, he was 19 when we dropped out. I was 22.
Bill Gates dropped out at 19. Mark Zuckerberg dropped at 19. Michael Dell dropped out.
The difference is those guys are really smart. I'm just smart enough.
And again, you latched on to a great co-founder. So tell us a little bit about the next phase when you kind of handed over, the blockchain education network and began to develop Augur.
Well, that was actually the first mistake. I didn't. I stayed in charge of the Blockchain Education Network while founding what would become Augur with that team. And the thing about entrepreneurship is, Elon Musk makes it look easy. It's not. It's like really, really hard. It's the hardest thing you're ever going to do. And trying to run two bootstrapped organizations at once is next to impossible. And so for a little bit, the Blockchain Education Network did flounder. We had built this massive grassroots organization in just over 9 months. And all of a sudden, I was trying to build a world-changing startup at the same time. And it really didn't work out. Fortunately, I eventually learned to delegate, found a new executive director. But for a little while, I really, the fall of 2014 was not the best semester for the nonprofit because I tried to do too much. But once I figured out that I had to delegate away responsibilities, that really became probably one of my greatest superpowers as an entrepreneur. Learning to find people that are more well qualified and more enthusiastic about what you need to do than yourself, and you give them those roles and you compensate it for them, compensate them for it, and then all of a sudden you have better running organizations no matter what you're doing. Delegation is like the key to successful entrepreneurship, which is something that I see a lot of entrepreneurs flounder with. But with Augur, I eventually saw this technology could change everything. We had no idea what a utility token was at that time because there were no utility tokens. It was the first token that was ever going to be issued for an application that was not its own blockchain. And so there was a lot of thinking going on. There was a lot of architectural decisions, a lot that we got wrong. We wrote a white paper on how to build a decentralized prediction market platform on top of Bitcoin. And then we released the white paper to a bunch of fanfare from the Bitcoin community. Everybody loved it. Then we started trying to build on top of Bitcoin a decentralized application. We're like, wait, this is really hard. Actually, it's probably impossible. And so all of a sudden we were kind of left with our dick in our hands, excuse my French, and saying, what do we do? Fortunately, because I was on the conference circuit, I knew Vitalik Buterin really well. We were the only young guys, pretty much the only founders under 30 that were flying around the world at that point. And so he had been advising us because he loved prediction markets. And he said, why don't you try building on Ethereum? And so we decided to go try and build on Ethereum 9 months before the blockchain even launched, when everybody was calling it vaporware. In hindsight, probably one of the dumbest things I've ever done as an entrepreneur, because it was just this compounded risk of building on a platform that hasn't launched yet, trying to build an idea that's never been realized before. But it worked out. I mean, we're getting there. I mean, it's an iterative process.
Well, you trusted Vitalik's vision, right?
Just look at the size of his head. He's got a big brain in there. I mean, he is a smart dude. And the fact was we didn't have any better options. And I'll be perfectly earnest with you, despite all these ultra-scalable blockchains, all these new distributed ledger technologies, I still think Ethereum was the best choice for building Augur. The question is now, should more of it, or will more of it need to be on second layer solutions? But Ethereum to me was still a great choice, but in hindsight, we didn't have nearly enough clarity to actually make that bet intelligently.
So obviously we worked together on Augur with that was really sort of the first kind of out of the winter ICO, because you literally had the first ICO, which was done largely through BitAngels with Mastercoin, and then you had MadeSafe in 2014 and Ethereum, and then you kind of, as the price of Bitcoin kept going down, you had about 8 or 9 months when there was just nothing.
There was nothing. There was whatchamacallit right before us. It was the hashing on the blockchain. I forget what it is. In fact, they were like a month before us, but their ICO totally bombed. They spent about $1 million marketing it, raised $500,000 in the ICO. So that was mortifying to us. Fortunately, our budget was much smaller. We had spent, and will sound crazy today, we spent about $300,000 or like $400,000 for all the legal prep, roadshow for Augur. We were super bootstrapped, and so we just needed to make more than $400K, and we would have been okay. And fortunately, we vastly exceeded that. Raising $5 million at the time, it was the second biggest ICO ever. I mean, it was a very big deal, and it was incredibly exciting. But I mean, the times were different, and I'd say that crypto winter didn't end then. I mean, when we did the Augur ICO, Bitcoin was at around 300.
Oh no, I said the ICO drought had ended.
Yeah, but even afterwards there wasn't anything for another.
That's true.
There wasn't anything for really another year. It really picked up in the summer of 2016.
With the DAO.
Yeah, with the DAO.
And waves.
Well, because the DAO showed people that all of a sudden you could raise massive amounts of money for really stupid ideas, which led to this ICO boom. So, but we didn't really kick anything off because everyone told us we were going to jail. There are all these articles about how we were going to jail for Augur. So it wasn't actually another year until ICOs picked up in earnest. And even then, I did not expect to see what I saw with all these utility tokens taking off. I thought we had created this very niche product that would suit, maybe a few dozen applications, maybe a couple hundred. But instead, thousands of these utility tokens flooded the market, much to my dismay.
So Augur obviously went out, raised 5.6 I think million it was, and I drank the Kool-Aid, bought into the ICO, and was very happy with the results of that. I mean, I think you went out at about 40 cents, and at its peak, it was around $90.
Oh yeah, I went up to a billion dollar market cap. I was appalled. I mean, there was really nothing that felt good about it except for the fact that I could say I spawned a unicorn. But literally, and I made a cake that a little unicorn cake, and that was the most I did to celebrate. Didn't sell any. I'm very long on Augur. I will never sell my position. It's just something I truly, deeply believe in. But no, it didn't feel good when the market went up like that. I think its market cap right now, I think I got told it was 150 million. Very reasonable.
Right.
I think we have too much demand to push up the prices of applications and protocols that are not yet being used, and that's a very dangerous precedent because you get a bunch of speculators that aren't helping drive underlying adoption or actual use of these applications, and that's not where you want a technology to be.
So Augur actually is being used on 99%.
Right. Well, it works.
Yeah.
It's probably going to be the largest set of smart contracts that ever get deployed on the Ethereum mainnet. I mean, it's insane what they built and made work. And you now know it's now an iterative process. It's about building second layer applications. It's about having scalability. It's about having stable coins so you can make long-term bets. And as those things start to come into play, I'm feeling very bullish on Augur, as bullish as I've ever been.
Yet you enjoy both left to then go into the venture world. Why?
Well, so I left because I wasn't a programmer and we had 3 years of coding left. I mean, I don't know if he knew that then, but I wasn't a coder, and for reasons I think you may know that I'm not going to say on stage. There was a bit of falling out after the ICO. I still fully support the team.
You were the face, though. I mean,
Yeah.
you were the guy on the road that really people
Although
learned about Augur
I've been
from.
somewhat whitewashed in the past year. There are articles that just don't even mention me. They call me an investor, but it happens. I think history has a tendency to correct it.
I was there. He was the face. You were at every conference spreading the word of Augur.
Yeah, but these sorts of things happen. Founder disagreements happen. Yeah. Obviously, there was a lawsuit. There's all sorts of craziness that comes with founding successful startups. But to me, I had kind of reached the point of diminishing returns. I could do everything I was doing for Augur while working somewhere else. Right. We didn't have to go constantly be evangelizing anymore. So since the ICO in the summer of 2015, I have been regularly talking about Augur, but it wasn't something I needed to do in a paid capacity. It was actually probably better that I was separated from the organization. So that wasn't really a big deal at all. And then Joey leaving was really after all the smart contracts were deployed. Okay. And now it's just much more of a maintenance role for the nonprofit. And I think that's good. Joey's so brilliant. He should be deploying his kind of intellectual capital where it's best used and serving dozens of really amazing early stage startups. It's probably one of the best things he could do. That's where I found that my talents were best spent.
Okay. So before I then get to your move to blockchain capital and then to Ausum, I've never asked you this before on stage or privately. Gnosis versus Augur, how do you see them playing out?
So Gnosis recently restructured the whole way that the betting markets work. There's no order book or anything. I've never seen a betting market in my life that doesn't have an order book. That's one thing that we realized when we were redesigning Augur, that we had to have a decentralized order book. I think they're using some sort of weird bidding system for making prediction markets. It's very strange. It's a totally academic undertaking, but most importantly, Gnosis is not fully decentralized. Their consensus system is not decentralized. You have to rely on centralized oracles. And that's the one thing that we wanted to avoid at all costs. That's what drove us to create the very first utility token, REP, was that we wanted a decentralized consensus or oracle system as part of our solution. And so REP allows thousands of people around the world to report on the outcome of events. With Gnosis, you're relying on a centralized entity to say whether or not an event happened. And to me, that's just deeply problematic.
And also, I remember that it was interesting, the four outcomes that the rep holders could sort of bet on is they could say, okay, yes, such and such won the bet or the prediction. They didn't win it. It's indeterminate whether it was won, so I guess it goes back until it can be determined. And the last one was immoral.
Yeah, so indeterminate and immoral are pretty much the same option. And the question is this actively encouraging something bad to happen? Now, there are lots of ambiguous markets. I mean, look, life insurance is an assassination market, if you want to be frank. I mean, it gives an incentive for someone to die. These sorts of payout associated with it. But, that's as far as I'm willing to kind of opine on that, because all these use cases are very theoretical, and they don't really make a lot of sense when you look at and they don't really make a lot. But at the end of the day, people can create any market that they want. They say, oh, like something terrible is going to happen. It's a decentralized platform. You can do anything with it, just like with BitTorrent,
So do you see really, as it evolves, kind of betting, obviously giant market, being the biggest usage, or insurance, and we're not talking assassination markets, crop insurance, things like that?
I mean, it's all betting. Soft markets are betting. It pretty much what Augur is Augur is the printing press for finance. If you think about what the printing press did, it allowed people to have access to literature, reading, and literacy. For hundreds of years, the clergy owned all printed manuscripts, and so they controlled literacy, and thus they controlled the minds of the people. Once the printing press came out, all of a sudden everybody could learn to read and then think for themselves, and thus the church lost a lot of its power. The way the financial markets work today is very similar. If you want to create a financial instrument or manage a financial market, you have to be a big, registered, institutional, pretty much a merchant bank or central bank. With Augur, anybody can create financial markets for anything. It's really just like the printing press for finance. If you have a market that you want to create, you are free to do so. Now, you should follow the laws in your jurisdiction. I'm not a lawyer, but it's truly, the potential of this technology is limitless. If there's anything that you think is going to happen in the future and you want to have a good sense of whether it's going to happen, you can make a market for it. So it's all betting, but so is stock market, so is investing in startups.
So we'll move now to the venture side. So you had a run with blockchain capital, and Brock will be here later, so we won't spend a lot of time on that, but you were there when the first security token really was made, and what was that sort of like? What was kind of the discussions? How was the confidence? And obviously it was a small offering. It was $10 million, but it sold out in like under a day.
I think it was 12 minutes or something. The way we looked at our security token offering was exactly how we looked at Augur's utility token offering. We're like, oh, this is kind of like a cool niche application of tokenization. We didn't see it being this massive new asset class. Utility tokens and then security tokens. And now I go around the world saying tokenized securities are going to be the largest crypto asset class in 2 years. But at the time, we weren't really thinking about that. Because when you stumble upon a great idea, you often don't realize how great it is. You're thinking about a limited use case. For Augur, we needed decentralized consensus, so we needed our own token on top of Ethereum. With the BCAP token at Blockchain Capital, we just wanted to democratize venture capital, allow anybody to have access to a venture fund. And those were our talking points. If you look back at our talking points, we weren't saying, oh, we're going to tokenize like every real world security. We were really limited in our vision to venture capital. And Brock said, we're going to go disrupt venture capital. Venture capital is going to be gone in 10 years, blah, blah, blah. But we weren't thinking about like real estate, like real world assets, equity, royalties, all these things that we're now talking about tokenizing and are some of the most promising components of blockchain tokenization. But we were very confident in what we were doing.
That was late 2016?
That was the very beginning of 2017.
Start 2017.
Because really nobody was willing to call their token a security before that. And so we were looking at all these ICOs and we're like, let's just go and do it. Let's go set the precedent. But once again, I don't think any of us could have expected the tidal wave of interest and the massive shift we see towards security token offerings.
Now, there's a lot of talk in this last year about security token offerings, but I think they're all fine. And I think that a fund was the absolute perfect, as Brock had called me before asking for my opinions on this as well, before he, kind of like committed. I'm sure he called a lot of other, folks in the space. And then once it was like committed, it was like boom, and it got done. But I think that what happened with blockchain capital, I mean, it had a very brief period of time where I think it was listed on Liqui, and it like doubled, so you literally could have gotten all your money back and still had a position in a fund.
Was it liquid though? I don't think so.
No, it doesn't
Well,
matter.
all the American investors were locked up for a year, so they couldn't.
Right,
But the
right.
foreign investors could.
But a foreign investor could basically go and double their money, or just simply go and get their money back and still have an interest in the fund, which is how markets work, is supply and demand. Now it's, I think maybe there's some really small decentralized exchange, but for the most part, it's just not out there. Is that because of just the fear of global exchanges to have any kind of security on them?
Yeah, these are not regulated security exchanges, and this is why there are all these security token exchanges coming out, whether it's what the T0 guys are doing, or Templum, or Cointopia, or Coinlist. All these guys are going and trying to figure out how do we go list tokenized securities. And I think we're going to see some of the very first exchanges go live by year's end, at the very latest. I mean,
So I'll give you a binary option, or maybe you can say that they're both going to work. 2 years from now, 3 years from now, is it Templar and T0 having that as their niche area, or is it OTC markets and NASDAQ and CME, who already has one token out there, basically saying we're going to go and create a token market because this is what we do for a living, is equities?
well, so they're in the equities business. So that's the thing. Because you can tokenize anything and create a tokenized security for virtually any real-world asset that's scarce and valued, I think let's say NASDAQ really gets into this, goes in hard, and NASDAQ has not been a great innovator in this space. They really haven't done much. They talk the talk, but they don't walk the walk. But let's say they do walk the walk and create a tokenized equities exchange. And they tried doing that with Link, remember, for the pre-IPO trading, and that went to nothing. But let's say they do it, they can probably own that market. But there's so much more you can do, whether it's things like royalties, intellectual property, real estate, largest asset class in the world besides derivatives. I mean, tokenized insurance products. I mean, there's so much you can do that I think all these securities trading platforms will be successful. I mean, it's their game to lose because there's so many different markets and vectors they can attack.
So I'm going to spend a little bit more time on the securities token market, because it's
the most interesting component of this industry today.
Yeah. And so do you see, let's go 5 years in the future. You're 31 by then.
Oh my God.
God.
Let's hope I make it past the 27 club.
Yeah, you're not doing heroin and playing rock and roll, so.
Well, rock and roll, it depends on your definition.
Professionally. So, but basically, if we're looking 5 years from now, and you've got all these markets up and running and you're right, not just equities, but also funds. And, a lot of times I think a reason why a lot of the funds are the first ones to go out is because people don't care if they have to wait a year. If they're getting a 15% royalty, that's what they're looking for. But 5 years from now, when this becomes mainstream, are the traditional real estate sort of dividend type buyers, let's say someone's average like 55, 60 years old, they're used to like going and looking through REITs and things like that, are they going to feel comfortable being on a token market, or is it an education process?
It's going to be totally obfuscated. They're not going to know that they're dealing with tokenizations or blockchains. I mean, people ask me where I want blockchains to be in 10 years. I say out of the picture. Like, you don't want to see them. You don't want to know they're there. Just like when we use a mobile app on our phone, or we're on our computer and on a website, we don't know what database the platform we're using is using. We don't want to know when we're using a blockchain. It should just be faster, more efficient, more secure, more tradable, liquid, democratized, blah, blah, blah.
So you'll go to your E-Trade or your Charles Schwab or whatever, and you're not going to know that some of it's blockchain, some of it isn't, any more than you would know whether there's an Apache server on a site.
Exactly. We're literally talking about database technology here. Blockchains are the least sexy, interesting thing in the world when you get down to it. At the end of the day, yes, they're revolutionary, but at the end of the day, you shouldn't know you're using one, unless it's something like Augur, and even then, I think most people that interface with Augur in 5, 10 years won't really know it's a blockchain-based application. I think blockchains, just like we kind of go on the web and we don't know what's happening in the back end, it's the same thing. When you use a blockchain-based application, you're just not really going to know, and you're not going to care. You're just going to know that it's censorship-resistant, can't be shut down, blah, blah, blah. Or in the case of real estate, you can now buy fractionalized interest in the Empire State Building. and that's something you couldn't do before. And it's a building that's probably not going to go down in real estate value. It's just creating more economic opportunities, broader economic opportunities. But at the end of the day, the blockchain narrative has to disappear because blockchains are complicated and messy and not something that most people need to know about.
Last question before I turn it over to the crowd. Awesome. Vision, and how's it been going?
So pretty much, I got into crypto because I want to change the world. I want to make it a better place, and I really believed in that vision. But by late 2017, especially as I became like the poster child for like young crypto millionaires, I suffered a lot of cognitive dissonance because I never got into this industry to get money. I never did anything in this space to make money, and yet all of a sudden, that was the prevailing narrative at the end of the year. And I was thinking about the investments we were making at Blockchain Capital, at Polychain, where I was one of the very first investors, and I didn't feel like there was a deep philosophical alignment with the value I saw in blockchain technology. We were investing in deals that had the potential to make a ton of money, but weren't necessarily going to make the world better. And so I started to think, look, I'm making all this money in crypto, why don't I go and launch my own fund that's really focused on the intersection of blockchain technology and social impact. And so that's what I did. I met a brilliant co-founder, Barbara Minucci. She's the first Latina to launch her own venture fund in Silicon Valley. Total badass. And we got together and we were like, let's go do this. And after a little while of fundraising, shooting the shit with LPs and getting really frustrated by them, I was just like, it's gonna be my fund. We took money from a few select investors like Mark Andreessen, Chris Dixon, Mike Garrington, a couple friends. But for the most part, it was just my money so I could invest exactly how I wanted to into companies I really thought would make a difference. And that's actually proven to be an incredible perspective to take as an investor because the best founders find it in alignment with that. Most founders believe that they're making the world better. And so when they see that that's what our kind of mission-driven statement, they come to us. And our deal flow is unlike anything I could have expected for a first-time VC. I had obviously been at BCAP, but my first fund, the deal flow we get is unparalleled. And it's been a really remarkable experience to have so many young entrepreneurs and older ones coming to us and saying, this is how this is my vision for making the world better. And that's when I got into this for the first place. And so it's really exciting.
So structurally, and again, since it's mainly you and your friends, you can sort of have looser rules, I guess, than, I can only invest in equity or I can only invest in this. Are you investing in equity, tokens, mix?
So yeah, so we kind of ripped off of the blockchain capital model slightly, but we're a hybrid venture hedge fund. So we're pretty much long only on the token side of things, but like a lot of the early stage investments we do, we're typically the first institutional money in. Those tokens that we invest, or those companies that we invest in, eventually will release tokens. So we need an ability to trade those. It's impossible to be a venture fund in the crypto space and not be holding tokens. So you have to really create a novel sort of limited partner agreement. But the hedge fund model doesn't work for me. Every hedge fund in the crypto market, except for a couple algo funds, are down right now. And it's because there's nothing to hedge with. And so I would never take that short-term perspective as an investor. I'm totally longitudinal. I'm thinking about 7 to 10 years, what's the impact we can make? And that's how we think about all of our investments. We trade if we have to on the crypto asset side of things, but it's not something I enjoy doing. It's not something we specialize in. I say we've never said we're good traders. We're good, we just get in early. And that's all that really matters.
Yeah, I think the larger hedge funds, and Chris from Alphabet will be speaking later. Right now algos are making decent money if you've got a good team.
Decent,
10 or 15% a month.
Yeah. Which is great for a hedge fund.
Great, right?
But they're really only a small number of those, especially at scale. You can do it easily with $1 million. Doing it with $100 million gets really hard.
And so, I think all of the funds, though, obviously you mentioned Polychain. I think they had a full year of 2017. It had like a
best performing hedge fund ever.
Right, 2,100%.
I was an investor in the GP, and I got kicked out of the GP this year because of a restructuring. And oh my God, the payout for GP investors was just insane.
And again, that was being one of the only ones in 2017, but they
From
they
the
oper-
start. They were from the start.
From the start, yeah.
And it was heavy in ETH. But they kind of underperformed the overall market. Like if I had held the crypto that I gave them, I would have outperformed them.
So, questions for Jeremy? And I should probably hand over my mic. Jen, you want to find someone? Come on, somebody has to have questions, otherwise we'll move on to the
I
panel.
saw a couple hands. I left everyone in shock.
Actually, I don't think that we need a mic because actually we will hear you pretty well without a mic. I don't think that mic is
Okay.
being used. So, but if you prefer, I can use the mic, whichever is better. So I have two questions.
So say your name.
So my name is Yanni Tasev. I'm originally from Bulgaria. We did a lot of all kinds of research, IT in that country. We had a lot of influence from Russia and yet America now. So it's a very interesting hotbed for cryptocurrencies, scams, and good stuff happening. So it's kind of a mixture. So when you have an economy where you have a PhD in nuclear science giving you a taxi ride from the airport, you come up with some genius ideas and some really bad ideas. So this is the country that I come from. Now I live in Vegas.
Are you a nuclear scientist?
Me, myself, not yet.
And your question is?
Yes, so I have two questions. One is on personal level, one is on professional level. I'm going to start with the personal because we heard a lot of professional. What do you do in your day to slow down and take your mind away from all this big change?
I go dancing. I love dancing.
What kind of dancing? Salsa, merengue?
Everything. I love dancing. I go see lots of live music. I party a lot. That is kind of my escape. I'm kind of well known in the industry for my late night antics. That is how I kind of separate myself from the professional stuff because you do need to take a break.
I got into an economics scholarship with an essay named Dance With Me and how dancing is an international language. So all of you, even if you speak a different language, dancing is the common language.
I call myself a part-time nightclub sociologist.
Perfect, awesome. And the next, the professional, it's more of a statement, but I think that here in this room, you have a lot of visionaries. And I see that you are well ahead of probably most of us. How do you determine whether you're sane or not? How do you determine whether you're sane or not? Whether your idea is applicable in the market? Because I guarantee you probably 90% of people tell you that you're out of your mind.
So I'll be frank with you. I don't think I've come up with a novel idea for a crypto company in like 3 years. I think the intelligence quotient for this industry has raised so exponentially that it's the smartest guys in the world coming up with new ideas and new companies. So that's one of the reasons why I went to venture capital. You know, in 2014, 2015, it wasn't that hard to have a good idea in crypto. Although today it's next to impossible. I mean, you don't see that many great new ideas. More often, it's someone with an idea that's already been tried before, but just doing it better. Because that's what entrepreneurship is iterative.
Exactly.
But I don't think I've had any insane ideas. I mean, my big idea that I'm going to start working on in January is I'm starting a men's makeup company. But that's like that's not crypto related.
So you have completed so far.
And that sounded insane. But I just ask people on Facebook. Nobody steals ideas. So that's your answer. Is I use people I trust as a sounding board.
Okay, one more question, and then we're going to move on to the panel. One more question. I'm going to ask the last question, which is, there was one more? Oh, there we go.
Ask it quickly, and I'll.
Okay, let's get the let's get the mic over to you because you're at the back of the room, Sean, and say your name and then the question.
Sean Barger, Meteorich.io CEO. One question. How many funds do you know that are actually placing money right now?
All of them. Everyone that I know that actually has capital. There are a lot of bullshit funds like, I have a crypto fund. They don't actually have money in it, like they're raising right now.
Right.
But any of the names that you read in CoinDesk and the news, there's a handful of funds that have tens or hundreds of millions of dollars, and we're all actively deploying capital. This is the best time to invest.
What size checks do you write?
We're 100K to 500K.
And how much powder you got left?
Plenty.
Okay, Martine, and actually, Jen, if you want to take over and
Yeah, we'll
announce
go
the new
ahead.
panel.
We'll go ahead and go to the next panel.